All right, welcome back to this week's Breakout Watchlist from September 12th to the 16th. In this video, I'll be covering the top 10 setups that I'll be watching going into next week. Each of these stocks either have strong fundamentals, strong technicals, or have strong volume patterns that lead to uptrends. Big thanks to MarketSmith for sponsoring this video. MarketSmith is the trading research platform that we're going to be using to break down each of the setups. Here are the 10 stocks that we'll be covering today. Don't want to spend too much time here because we got a lot of charts to go over. All right, the first stock that we'll cover today is ARLP. This is in the energy coal group, which is the 19th strongest in the market out of 197. That's an A group strength rating. This also has a B accumulation distribution rating, meaning many of the heavy volume days come on up days and many of the lower volume days come on down days. So we're seeing heavy volume buying, low volume selling, which is ideal. Overall, the stock has a 99 individual composite rating, which is the strongest that MarketSmith gives, and a relative strength rating of 99 as well. So two 99s there within a strong group. It's a stock that we should have on a watch list. Within the group of 12 stocks, this is ranked number 1 on relative strength and number 1 overall composite. So it's the strongest stock within that strong group with all those strong fundamentals. Taking a look at the chart, you can see we're above all the key moving averages, and we closed Friday right on the 8-day EMA after bouncing Thursday off the 21 EMA. A couple of the other coal names in the group, AMR, CEIX, they've had rough weeks last week. So if we see a bounce back in coal names just as a whole, this is the one that has held up the best and we anticipate would move the highest in the shortest amount of time. On Friday, we had really tight price action, but still closed positive, up 2%. And we have kind of a two-day pivot to work with. Couple areas to watch here is if we pull back in the market on Monday, and this holds the $25 area, we could start a position around 25 and then just have that risk management even tighter to the 21 EMA. Otherwise, if we're buying on strength, we're buying with a break over the high on Monday, which was 25.71, and then you got to keep your stop loss kind of just under 25 for around 3% risk there for ARLP. The next stock we have is AXSM. This is a biotech stock. Biotechs have been very strong lately. This is the 5th strongest group out of 197 in the market. So A+ group strength rating. This has an A- accumulation distribution, so a little bit stronger than ARLP. Overall composite rating 78 with an individual relative strength rating 99. Doesn't have any fundamentals to show, so this is very much a technical setup instead of fundamentals. Many of the biotech stocks do kind of act on their own accord and trade based on technicals, and this is no different. What I like about this, we had a strong move from 20 all the way up to 71 with a little pit stop in between there. Since then, we've pulled back down to $60. We undercut the 8-day EMA, but we haven't even tested the 21 yet. So even as this market came, here, let me switch to temporary there. So even as the market really sold off the last couple weeks before last week, this pulled back as well, but it also held this 21 EMA, this pink line here. From there, let me go back to track price and switch over to a 15-minute candle. You can see recently we've been putting in higher low, higher low, higher low as the market conditions have been improving. And we have obvious seller at $63 here. So if we can clear $63, that's a potential entry point and one that I'll be looking for AXSM. Next we have BSM, and this was on my watch list going into Friday. Unfortunately, it gapped up over my buy point, so I never pulled the trigger. But it's one that I'll be watching for next week as well. This is an oil and gas name. Oil and gas, 16th strongest group out of 197 in the market. So A+ group strength rating, B- accumulation distribution. That's one slightly warning sign there. But 94 overall composite, 95 individual relative strength. In this last quarter, we had over 1,000% earnings per share growth, 209% sales growth, and 73% after-tax profit margin. So really strong fundamentals in that last quarter here. Looking at the chart, you can see this big cup and handle. MarketSmith already points that out to you automatically. I was looking for a break over the 2-day pivot from Wednesday and Thursday's highs. That was around $15.90. Unfortunately, we gapped up over $16. We did come back into that area. I just didn't put on the risk then. But we came back in to that 8-day EMA, came back into that pivot, and then buyers stepped in. The smart people, smarter than me, came in and bid it up back over $16 and back over the high on the 6th, which was another kind of pivot area that we could buy off of. So I don't want to be buying extended here. We did get good volume, so everything's looking good. Maybe I just missed this setup. But if we have tough time on Monday, Tuesday, something earlier in the week, and this pulls back into that pivot area and into the 8-day EMA, that's where I would look to start a position on BSM. Sticking with oil and gas names, we have DVN, Devon Energy. So we already have that A+ group strength rating. This is C- accumulation distribution, but 99 overall composite, 97 individual relative strength. And for the last 4 quarters, this has been very, very strong fundamentally. Similar action to the other oil and gas names. You can see a big cup and handle here. This one is still a little bit lower in the handle, which kind of signals that it's not as strong as the others, but it also hasn't broken out yet, so I can keep very tight risk compared to BSM, where you got to be a little bit creative with your entry point there. So with this, just looking for a break over $70 or a break over Thursday's high, which was $69.60. In that area, if we get in as low as that, around $70, then we can keep our stop loss under the low on Friday, which is $67.55. Call it $67.49, just under that kind of round-ish number. It also would be under the 21 EMA as well. So not only do we get under the 8-day, we get under the 21, and then if price breaks down under that, it's more likely that this is a failed cup and handle and we're going to be breaking to the downside. So really good risk reward on this in a strong group, and many oil and gas names are putting in these cup and handles. So looking for a break over Friday's high or a break over 70 as a potential entry point for DVN. Next we have FLNC, and this was actually a stock that I owned on Friday. I just took this off because it was below my entry price and I don't want to hold losers overnight in a bear market. I'll just put the risk back on Monday if it starts working out, but this is an energy alternative and other group, so 4th strongest group out of the market. A+ group strength rating, B accumulation distribution, 52 composite, 97 individual relative strength. The composite's so low just because the fundamentals are not there yet on this one. But this IPO is starting to work up the right side of the base here. You can see we ran into a little bit of resistance at this declining 200-day simple moving average. Then we popped that on pretty nice volume, above average volume. And then as this market came in, this came in as well, tested that 21 EMA, did break under it, but the 2 days it broke under, we both closed back over the 21 EMA. So the breaking under is one thing, but closing under is another, and we did not close underneath the 21 EMA. So buyers stepped in by the end of the day there. Really nice action the last 2 days, just very tight and very low volume. On Friday, this was about 44% of the average daily volume there. So that's exactly what you want to see out of consolidation days. Moving to 15-minute candles here, you can see just how tight this price action is getting. So I'll be looking for a break over this intermediate day high, 18.85, and then a potential add spot at $19. Going into Friday, you can see what I was looking at. I was looking for basically a break over 18.90. We gapped above that, and then as it came in, I did start a position at 18.90, and then we closed just slightly under it, so I took it off for a very small loss. But on Monday, if we come in, break over 18.90 again, I'll put that position back on, and we'll see how this goes. It's a strong group, and this very low volume as it's tightening up is exactly what we're looking for FLNC. Now we're in the back half of the video. We got 5 more stocks to cover, but before that, if you guys are enjoying the video, please do me a huge favor and leave a like. It just takes 1 second of your time, and it really helps YouTube push this video out and my channel out to new traders. Thank you so much for your support. Now let's get back to the video. The next stock that we'll cover is GFS. This is a semiconductor stock. Semiconductors have been getting hit pretty hard, but there are a couple names in the group that are holding up, and another one, WOLF, that we'll cover a little bit later today. So semiconductors, 84th strongest group out of 197. It's still a B- group strength rating, so it's not disastrous. Overall composite rating, 91. Individual relative strength rating, 90. This is an IPO that I've been watching for a very long time, basically since, it IPO'd. It had been showing great relative strength early on in the bear market. It looked like a potential leader, and we're still there with that. So looking at the chart, we could see an inverse head and shoulders pattern where that right shoulder is much higher than the low of the left shoulder. And that's exactly what you want to see in an inverse head and shoulders. When you're trying to short a head and shoulders pattern, you want the inverse of that as well, where the right shoulder is below the high of the right shoulder is below the high of the left shoulder. But we're talking inverse, and we're wanting to buy for a move to the upside. So we want that right shoulder low to be above the low of the left shoulder. Box is checked there. very strong fundamentally, earnings per share, sales, after-tax profit margins, all improving very drastically over the last 4 quarters. And within the group of 31 stocks, it's 5th strongest on relative strength and number 4 strongest overall composite basis. Taking a look really quick at the fund ownership, is big money flowing into the stock? It absolutely is, going from 257 to 330 to 351. You don't see that continued buying from funds in many stocks, in many growth type stocks this year. So the fact that this is fighting against that trend is another thing working for it. You can see we pulled into the 200-day simple moving average, which was flat at the time as the market was making its now higher low. And then we rallied up through 60 and then just kind of stalled on Friday, basically flat on the day, down 0.1% and closed just over $60. So the last 2 daily highs are around $62. I think they're $62.18, $62.19. So we know that there are sellers at the $62.19 area. You can even see on this day, $62.34. So this pivot is starting to become pretty obvious here. So to avoid buying an obvious pivot and obvious area that liquidity is going to come into the name, I want to be buying as close to 60 as possible so I can also keep my stop loss under the 21 EMA, 58.70, to keep a very tight stop. And then as this breaks up to the upside and goes into this area, I'll probably trim some right away. This would be about a 3% move. So enough to pay a little bit of the risk on the trade. And then if it gets going from there, then that's awesome. But we know there are sellers lurking at the $62 area. If they are done selling, then it should zip through this area. But to be on the safe side, again, we're still in a bear market. I'm still trading pretty defensively. I would want to get an entry closer to 60 in the 8-day EMA as possible. Then we can keep a tight stop under the 21 and then sell a little bit into strength at that area that we have been seeing sellers for GFS. So last week, the talk of the market were solar stocks with EMPH, First Solar, FSLR breaking out. And SHLS had a good day, a good couple days, but kind of came back right into that. So this name is kind of a secondary name in the solar group. It does have this overhead resistance, overhead supply, which we could be running into, but it's something that hasn't broken out yet, and I want to kind of put on your radar. Solar, number 1 stock or number 1 group in the market, so A+ group strength rating. This has an A- accumulation distribution rating, 93 composite, 95 individual relative strength rating. Earnings were a little bit down this quarter, year over year, so that's one thing to kind of warning sign. But fund ownership increased from March to June. And within the group of 22 stocks, this is still 7th strongest with a 95 individual relative strength rating. That just shows you how strong the group is. So inside candle on Friday, closing down 4%. A lot of the solar names got hit. I think ENPH and First Solar both got downgraded, but they had pretty nice moves later in the day to kind of close relatively strong. Let's go to a 15-minute chart on this. So pretty drastic action. Here's where Powell started talking on Thursday, and then we rallied and then kind of closed relatively weak there. What I'll be looking for is a break over 2680 right through here, this intraday pivot, and then try to get my risk under the low of the day. So that would keep my stop loss much tighter. And because I know this is a secondary name, I want to keep a tighter stop than usual because I don't want to be losing a large amount of money on a secondary name in the group. If I'm going to bet big on a solar name and kind of buy a more obvious area, I would want to try to get in like Enphase or First Solar. But those have a little bit of work to do to get a low risk entry point. So we're going with SHLS this week. Another IPO is next. This is UDMY, UDMY. This is a very weak group, computer software, media, education media, 110 out of 197. So C+ group strength rating, B accumulation distribution, 42 composite because it does not have the earnings, but individual relative strength 87. And I really like what it's doing as it's working up the right side of the base here of its IPO base. We put in higher lows here, higher lows here, higher lows here. So 3 higher lows now as we're kind of climbing that right side. A little bit of resistance at this 1550 pivot, but we broke over that cleanly on, that'd be Wednesday. Inside candle Thursday, inside candle on Friday. So a double inside candle as we're consolidating. And going to the 15-minute chart, you can see that nice flag pattern that we're working with here. So ideally, in a perfect world, we kind of open lower on Monday, and then we can use $16 or kind of like the high of where we closed on Friday, 1604, as a potential entry point. If we gap above this area, I'm not chasing it because, again, this is still a weaker group, so we don't have all the probabilities on our side aligned with us. So I'm going to be very picky with how I'm going to enter the stock. It's also relatively lightly traded, only 500,000 shares traded a day. So because of those two things, unless I get that perfect entry point where we're gapping down or we're starting a little bit low and then taking out $16 on strength, I'll just use this as a kind of mental trade and see how this acts. And then if this breaks out and holds the breakout, then I can get more aggressive on my next setup. Two more stocks for you. First one is VIST, back to oil and gas names. This is in the exploration and product group, so 23rd strongest group out of 197. A group strength rating, 96 composite, 98 relative strength. Very strong fundamentals, all that good stuff. Not the clean cup and handle, but also a little bit of inverse head and shoulders. You got the left, you got the head, and you got the right with the higher low than the left. From there, we attempted to break into new highs, but like I covered in my last video, you don't want to be buying breakouts the first time to new highs unless you're moving those shares very quickly, selling into that strength and that liquidity right away. But you see, we broke over 10, made a new high, and then very quickly came back into, let me change this to tracking pen, to 932. So this would have stopped you out if you tried to buy at 10, unless you're using a pretty wide stop. I like to keep my stops 3 to 5% though. It did come in, but it held the 21 EMA, so that's good. Putting in a higher low here, and now we're tightening up kind of above the previous pivot. So that first initial shakeout, even the second kind of shakeout by those new highs is out of the way now. So now we could be a little bit more aggressive with buying on the way up. Let me change this to a 30-minute candle. But you see what I'm looking at here is just downtrend line through the high there. So I'll be looking for a break over 1033 as a potential entry point for VIST on strength here. The last stock that we'll cover today, I already alluded to this. This is WOLF, Wolf. It's a semiconductor. So again, 84th strongest group in the market. This has a B+ accumulation distribution rating, 89 overall composite with a 97 individual relative strength. This just had earnings where they had negative earnings per share, but a little bit better than last year, negative 23 cents, now only negative 2 cents. Sales were up 57%, after-tax profit margins basically flat. But we had this nice high volume power earnings gap where we were up, what was that, 32% on basically double the average daily volume there, and closed nicely in that range, 92% closing range there. From there, we zip out of it, so continued buying, which is nice to see. And then as the market comes in, this comes in, breaks the 8-day EMA, but doesn't even test the 21, not even with the low of the days there. So nice to see. I do have a position in this. I bought it at 110 as we broke over here on Wednesday. Looking to add to it if we come back into that 110 area. But this is one of those groups where, again, potentially we're putting in the left shoulder, the head, the right shoulder, where the low was above the left. So a lot of inverse head and shoulders in the setups this week, which I didn't have by design, but they were working out. So with this, if we see weakness in the market after this, 4-day rally here, if we pull back in a little bit to the 110 area, that's where I would want to add to my position for WOLF. And that's the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a huge favor and leave a like and subscribe to my channel. I make this breakout watch list video every Sunday. I go live on Tuesday nights at 7 p.m. Central. And I also do trading audits, which the first video of that trading audit series is out now. And a big thanks to MarketSmith for sponsoring the video. MarketSmith was the trading research platform that we were using to break down each of the setups. If you want to give MarketSmith a try yourself, there's a link in the description below. And if you guys want to hear more from me throughout the week, you can follow me on Twitter. That's at Nick Drendel there. And on all the other social media platforms, it's at Nick_Drendel. Have a great rest of your week, and I'll see you guys Tuesday night for the trading live stream.